internet connections. So we'll see how that goes. Hopefully it didn't start a new video. So here's another reason as a currency trader why you should have 2 redundant internet connections going to your house. So I have Comcast coming in and I have AT&T coming in. Comcast went down, I just switched over to AT&T. And I don't like AT&T, so I'll probably have to go back to Comcast. But Comcast has been awarded the worst company in America something like 19 times in a row. 19 years in a row. So anyways, you guys should be fine now. It was pretty good because I was jumping into like the Communist Manifesto, Das Kapital. I'm like, ooh, where was I going with that, huh? Let me update the regression here, and things are significantly different than they were before, eh? Oh, for sure. Okay. Okay. Not a good actual entry for the month. It's one of these things like you could have been at the selling off the M3 and it got to the R1, which may have knocked you out, but maybe you got back in, or maybe you didn't get knocked out because you had it above the R2 this particular week. But it's like one of these things that you're probably not on it to the downside, although you may have wanted and never got the entry, and by the time it happened, it was too late, and all these different things. But you know, where's the support and resistance is always the big question. And obviously this is the support, and there's the breakout pullback. You see that? This is just from the Canadian jobs report on Friday. That was pretty easy. And let's get rid of the regression because obviously it's already changed direction. But I want to point out the idea that even if you were a bear, you were trying at the beginning of the month to sell in here. And what maybe it worked out, and maybe it didn't, and maybe you were short, and then you got knocked out for a loss, and then it came back, and would you have entered before this? Probably not, and so you may not have been in. This might have been your swing short that you never got on. And it's really easy to then cry, okay, and just get all upset. Remember, there's only a 3-second rule, okay? Ideally, what you do is then say, okay, that's a breakout. I'm trading the rule reversal, and there's my second chance entry. Okay, and that is before NFP. That's just a breakout. This, you probably would have shorted this, let's say, Wednesday of last week. Okay. Okay. Is this live? Yes, it is live. Was it related to the hurricane? No, there's no hurricane now. The hurricane refugees went back to Florida with their 3 cats. So I had 2 adults and 3 cats living in my house while I had family visiting from California. So then I had to move someone from who my family member was going to stay in the guest room, but then I had the Florida refugees in the guest suite. So there, my guest, instead of being in the guest suite, we've set up a bed down in the movie theater because it's soundproof and perfectly dark. So it's actually a fantastic bedroom. And so that transition was a little awkward. And then the Floridians went back to Florida, and then my dad moved back up into the guest suite. So there you go. That's how you keep society alive and happy. Okay, so anyways, there's our kitty cat. Let's go through the calendar. You are not alone. I am here with you. Okay, Forex.Today. Yeah, pound Swissy. Yeah, it would have been very much the same. Yeah. Oops. Whoa, whoa, whoa. Can't go full screen on this. So did it start a new video because I lost internet for a few seconds? Sometimes YouTube says, oh, I guess it's a new video. So hopefully there's not two videos today. So of course, JL, I haven't actually left. Internet dropped for about 5 seconds, and then I switched to a redundant internet connection, came back. So I don't know if it moved it to a new webinar or not, and all that kind of stuff. But anyways. Where are my friends from Johannesburg? Does anyone recognize that shirt? Let's start a new video. Terrible. Sorry, guys. Does anyone recognize that shirt? From Joburg? Yeah? Oh, well, it'll just be 2 videos today, that's all. All right, so anyways. Raymond, the Wanderers. Yes, the Wanderers. The road go round and round. Yeah, anyways. Okay. So manufacturing around the world is really messed up, right? But we're talking about, I think it's 10%. 10% of the global economy. You know, here's something interesting too. Like, if you're an economist, there's a lot of discussion over the last several years about productivity being low, and maybe productivity is not low, we're just not measuring it right. Now, what kind of person's working on this problem? 40 and 50 and 60 and 70-year-old people with PhDs. Let me give you an example of why, let's say, this is going to take another 20 years to figure out. And it has to do with the people. They're smart enough, that's cool. But A, they're nerds because they have PhDs. So they're not connected with society. They're not your average dum-dum. So they don't do average dum-dum things. Well, the thing is, when you measure the economy is aggregate, which is 99% dum-dums. So you got someone not part of society looking at society from their point of view and going, there's no productivity. Okay, so there's a problem. So those old guys have to kind of die, and the new young people getting PhDs will have to go through and say, wow, these numbers like GDP, this doesn't make any sense at all. And I'll give you an example of that. Who makes iPhones? What company makes iPhones? What company makes iPhones? Not Apple. No, Foxconn. No, you're totally wrong. If you look at GDP numbers, China exports iPhones to the United States. It's Foxconn. Not Huawei, yes. According to how GDP and import-export data counts it. But who sells iPhones? Oh, did I? Well, I didn't say by China. I said okay, I shouldn't have said exported, but whatever. I don't want to get into that. But no, it's actually, I think it's made in China, but whatever. I don't need to get that far. I'm just saying non-America. But then Apple sells these devices around the world, and the money goes into the bank account Probably not even in the United States, probably into Ireland, but it's reported in the United States and people buy the stock, whatever. And things like GDP doesn't report that. That's not how it works. Or how about Google puts Android onto phones, but that's not an export. Okay? And then I'll give you another example. 13-year-old kid is playing Fortnite. He pulls out a credit card, takes it from his dad's wallet, pulls out the credit card, and buys something to pimp up his character so he can run around Fortnite. Maybe he has a bigger gun, maybe has a funny hat on, maybe he does a funny little victory dance, but spends 20 bucks. Where does that get counted in GDP? Is it a good or a service? Right? Is it a product or a service? Is it an import or is it an export? It's not even counted. Because the nerdy, 72-year-old PhDs working on this problem in their esoteric ivory towers at Harvard, they're counting iron ore and coal exports. And yet, Fortnite is something like $17 billion. Okay? You see what I mean? But it's not even counted. And they don't even count Android operating systems and stuff like that. Like, is that an import? Is that an export? Is the virtual hat a product? They'll say, no, it's a service. It's intangible. But to the person playing the game, it's totally tangible. I can kill more people with this bigger gun. Or this hat is just funny and I'll get more friends. Like, it's totally tangible. I get immediate real results. No, it's a service, not a product, and therefore not counted. So it's amazing these gaps in global trade that the PhDs don't understand, governments don't understand. It's just really amazing. And pretty soon the whole world is going to be like that, right? Where if you live in a small village in India, you might be building websites for somebody in Ohio. And it probably doesn't get counted. But the whole world's going to be that way. So it's just kind of funny. So anyways, GDP, yeah, okay, came out great. Okay, so anyways, let's move on. What's going on in the week? Tuesday. Looks like a pretty quiet day. Okay, pig's going to move. Great, pig always moves. Okay, PPI, do you care about PPI? No, you don't care about PPI. Should you care about PPI? I'll tell you what. You should watch PPI as a leading indicator to CPI. And CPI is sort of an ugly cousin substitute for PCE. And you only care about PCE because that's what the Fed looks like to adjust its monetary policy, but the Fed's already telling you what their monetary policy is, and we all know they're likely to cut interest rates in the near future, so PPI should be completely irrelevant because PPI only sets up CPI, CPI only sets up PCE, PCE only sets up Fed policy, but the Fed's already telling us their policy and their future policy, so none of this actually matters. This is why news is not fundamentals. So PPI will come out, woo! Okay? So if PPI comes out greater than expected, it's a hint that there's inflation at the producer level, and that will get passed on at some point to somebody, and at some point, maybe if the producers and the retail people can't absorb the lower margins, then they pass on the higher prices to consumers. We call that inflation. And then we would see that in CPI. And then CPI isn't actually used by anybody, even though the big news outlets make CPI seem like it's the most important thing on the planet, except the Fed doesn't use CPI. It's too chained, actually, is the technical term for it. It's they're chained prices. So what they want to look at is PCE, because it manages the basket differently. And PCE you only use because if there's so much inflation on the PCE level, then the Fed's going to have to adjust interest rates. But none of that's important because they're already telling us they're cutting. We already know what that is. The issue is when they stop cutting, what happens next? Okay? But we're in sort of the beginning of a downward cycle, so therefore this is probably irrelevant for about a year. Okay. Okay. Cool. What is Fortnite? How about this? I think it was $17 billion last year for a free game. I have to get in the camera. Free game. Made $17 billion last year. Based in North Carolina. And 40% is owned by Tencent. Chinese! Yeah, it's actually owned by Tencent. Not 50 Cent. Yeah, of course, what is Fortnite? Tencent. I love Tencent. He nice. Anyways, all the way to Thursday. ECB, ECB, ECB. Now here's the news to use. There's a real bickering going on at the ECB. Real bickering. Draghi's got some problems. So this is going to get interesting, as they say in America. It's going to get interesting. Okay? So we're not going to get clean decisions anymore. And there may be dissenters and stuff like that. And are we going to have tiered rates for European banks? Are we going to have quantitative easing? Are we going to have further negative interest rates? There's some ginormous questions. And by the way, if 10 banks have 10 different interest rates, how does that work? And by the way, is that what the free market would do? No. So if it's not free market, my humble opinion, it sucks. And the more the government does to make the market not free, the more the government is destroying itself. And the government is supposed to serve the people. So they're destroying the economic, welfare of their own populations. So they're going to run into, I think they're really on some thin ice here. Okay. It's going to get weird. So like Canada, I don't know if it's still the same, but when I grew up in Canada, the government set gasoline prices. So imagine now, this is pretty typical in whatever country you're in, where when you're at a busy intersection, at least 2, maybe 3, possibly even all 4 corners has a gas station on it, right? And in the free market, they charge whatever price they want. Some are higher, some are lower, based on whatever they're positioning in the market. So Shell will tell you, oh, well, they have better gasoline, which, I don't know, oh, it's got Techron in it. Really? So you want to pay more for Techron? I don't know. But anyways, they position themselves, right? In Canada, the government sets the price. So I don't know if it's still the same, but when I was a kid, the way that these gas stations would compete is by offering better quality service. So it's minus 25 degrees Celsius, and you pull up to the gas station. You don't want to get out of your car. So some kid like maybe me comes running out and knocks on the window, and you roll it down there, and you say, fill it up and check the oil, eh? Oh, for sure. So the window goes up, and they pop the gas, and you go over there and take out the gas cup and get in there. and over there, and then they pop the hood, and you go under and you check the oil. And then if it's the summer, you clean the windows while it's gassing. And finally, when the windows are done, you put that back and you drop the hood. The oil looks fine. Go and you finish the top off the gas. You put that away, grab a credit card, go inside. It used to be like that in Canada. I don't know if it's like that. Probably that you just go up and fill up your own damn gas and whatever. But it used to be that way. But if it's not, it shows you the slippery slope of the government being involved, because now what if they can't compete in service because that gets too expensive, and there's a race to the bottom typically. So you're like, well, we'll just cut that if they cut it, and all of a sudden cut all the service, and now everyone just gets fat and lazy because there's no incentive to offer better service because the government controls the price anyway. So now you try to give people less service and hire worse employees and cut expenses, and it just gets bad. Imagine that was your bank. And then what happens if some are forced to charge higher prices than others? This is going to cause some really strange unwanted consequences. I can't imagine, because that is not free market, nor is it a fair market now. So I don't know what the ECB is going to propose at these, the interest rate decision, and then the policy statement here later in the day. They're discussing and maybe announcing things like this. I can't imagine it being good. And banks in the United States were really upset during the financial crisis, and the government came in and said, all right, we have over $1 trillion. JP Morgan, take this $400 billion. And Jamie Dimon says, I don't want your stupid money. We're not hurting. Our bank is actually in a good position. We're going to start buying all our competitors. And the government says, no, you have to take it. JP Dimon is again like, this is JP Morgan. We were prepared for this. We don't want your money. And the government says, you have to take our money, because if you don't take our money, people know you don't need the money. And JP Dimon's like, well, yeah, we're a well-run company. We don't want to look to our shareholders and to our customers and even to our competitors like we suck like they do. We don't suck. We're awesome. Government says, well, if you don't take the money, then they'll find out that Bank of America sucks, and that's not fair. Actually, I think Bank of America even said we didn't need it, but other banks did, right? But that's the thing. If the other company sucks, they should be punished. They should go out of business and all their assets go to JP Morgan to manage. But anyway, so the government forced them to take all this money, right? Like, imagine now they said, okay, but it's unfair, JP Morgan, that you run your bank so well and you're not in financial trouble and everyone else is in financial trouble. It's really not fair. So we're going to give them lots of money for free, hundreds of billions of dollars for free. We're not going to give you money, and we're going to force you to charge 2% more than whatever they decide to charge their customers. And you're like, dude, well, that means all our customers are going to go to all the loser companies. Why would they pay more, except for the ones that are smart enough to know that they're with JP Morgan, a better business? You know what I mean? So all of a sudden, like, all the customers that are not in Ford will just go where it's cheaper, and they'll go work with the bad company that the government's supporting, and they're punishing the good one, right? So, like, that whole thing that happened, so, like, the government didn't do that last step, like, force JP Morgan to have higher rates to make it more fair for the pathetic companies that should go out of business. They got close, and they did force JP Morgan to take hundreds of billions of dollars that they didn't want. They fought against it. And then Goldman Sachs is like, oh my God, you're giving out hundreds of billions of dollars for free? And they're like, yeah, but only to commercial banks, and you're an investment bank, not a commercial bank. So Goldman Sachs is like, well, shoot. So they rechartered. Do you remember this? They rechartered to become a retail bank. And the government's like, oh, okay, now you're a retail bank. Here's a few $100 billion for free. They're like, thank you. We didn't want it, but you were giving it away. Like, why wouldn't we, right? It's like, oh my God. And then on top of all of this, remember that Geithner, in charge of this for the U.S. government, did all of this and then didn't have any tracking mechanism, didn't even require any particular use. So one bank bought a jumbo jet plane. Another bank spent millions of dollars renovating the CEO's office and buying a helicopter. They bought a new helicopter with their free government money. And wait, and the government shows up like a year later and like, you weren't supposed to buy a helicopter with that. And they're like, well, you didn't tell us what we had to do with it. We didn't even want your stupid money. Well, you're bad. You weren't supposed to use that money to renovate your office. And they're like, dude, you just gave it to me and I didn't even want it and you didn't even tell me what to do with it. So I found there was something to do with it. So then the government's like, you're bad, you're bad. And like, dude, we're not bad. We just... Right? So anyways, that's a history. That's like 10, 12 years ago, okay? But it actually happened. Okay, and I'm saying they could have made it even worse and punished JP Morgan further, okay, by forcing them to have different rates. Now, by the way, just to make this fair, do you know why JP Morgan was positioned better than all the other banks during the financial crisis? Was it because Jamie Dimon was significantly smarter than all the other ones? You could argue maybe he was, but here's what really happened. About 5 years before the financial crisis, JP Morgan had a massive loss. I think it was a fat finger trade and some other things, but they had some huge problems internally. Okay, huge. They made some massive mistakes. And a consequence of the massive mistakes before the financial crisis is they had to kind of restructure their risk profile, if you will. And they dumped all their very, very profitable subprime mortgage business. And they did a bunch of other things that they were required because they had such bad losses that they wrote off some of their portfolio. They sold off their subprime. They did a couple of other things. But it wasn't, as Carlos says, good risk management. It was because they had such poor risk management that the ball kind of dropped 5 years early, and therefore they were forced to do these things like sell a profitable subprime mortgage portfolio, not because they wanted to or they knew the timing, but because they had made so many bad mistakes that they had to like kind of clean house a bit. And they're like, yeah, so they got that. I think they dumped it to pay for something else where they lost so much money. So they had to dump something good to pay for something bad. So anyways, they just got through that. They were just climbing back up. And then, boom, financial crisis, and all their competitors went to hell because they had all this subprime stuff. And JP Morgan's looking around like, holy crap. Good thing we don't have any subprime. And it was just like, really, honestly, lots of people would argue with me on this, but hey, this is my story. I'm sticking to it. Dumb luck. Dumb luck. How about this? Serendipity. Serendipity. They're like, oh, snap. So anyways, there's a history lesson, by the way. There's a history lesson. What am I getting to? ECB may say we're going to have a tiered system for their banks. No, it's more Ray Bradbury than Stephen Bradbury. Okay. Tiered pricing for the banking system. Dangerous, man. I think there could be massive unintended consequences. And I doubt when the government gets involved in manipulating the free market that there'll be any of it positive. I think it could be bad, horrible, or catastrophic failure. One of those three. Hopefully they don't do it. Okay? No, check. Well, Ray Bradbury used to run things like he wrote what, Fahrenheit 451 and a bunch of things where the government takes over and controls everything in a horrible way. So anyways. So So plus the interest rate decision, not everyone agrees. Then there's the questions of quantitative easing. Should they do it or should they not? Not everybody on the committee, the governing board, agrees. And then, are they going to bring in Christine Lagarde? What is she going to say after the press conference? And all this stuff. This is going to be an interesting day, guys. There's so much going on now, and nobody agrees. Draghi's not, I don't know. This is a real problem. This is a real cluster. FUBAR. This is FUBAR. So, and look, CPI, but I already told you we did PPI. I talked about how that leads into CPI, and then I talked about how that leads into PCE, and then I talked about how PCE leads into Fed funds rate, and that policy is already set, and so therefore none of this probably actually matters that much, unless it's so stinking hot, like CPI, it comes out 2.5, 2.6, and people will say, well, then you should be raising interest rates, not cutting interest rates. But there's no real sign that CPI is going to be unbelievably hot. Okay? So that's, unlikely. But interesting times, don't you think? I know those are sort of long-winded, slightly off-topic discussions, but I don't know, hopefully it was entertaining and enjoyable and maybe educational versus me just burning through the calendar. I just went through sort of 12 years of history mixed with 1,000 years of history to kind of discuss the importance of what's going on this week. Yeah. Oh, that's cool, Chuck. Yeah, that's exactly would be right. In the final, too. That's really cool. Cool. So I'm excited. This is why I do this, actually. Over the weekends, I spend a lot of time thinking. I don't know if you know that. When you have to talk for an hour and a half to 3 hours a day, you have to spend probably 9 hours a day thinking. Otherwise, you don't really have anything to say. And so often I think about how lucky I am to have you in my life, and that we have this. I'm always interested, and part of my interest in knowing more and more about the market is sort of it's not a feeling, but it's sort of an unwritten sort of contract that, we keep each other excited and interested and involved in Forex, because I think a lot of people have found when they do it on their own, even if they do find success, they lull themselves back into failure, right? I don't know if you know that, if you know anybody like that, or if you've read stories about that. Even when you're successful, if you're on your own, what happens is you get sort of relaxed and maybe overly confident in your abilities. But it's, I'm not talking about horror stories when somebody is so confident they load the boat. That's just bad. That's just, they never were good. But I'm talking about people that are good and they're patient and disciplined and all this kind of stuff. They always have trade plans. It's good. And you get really comfortable in that. But what happens more than just sort of loading the boat and chasing bad trades and stuff is this idea where maybe every month you become 1% less disciplined. You get the same results. You're 1% less disciplined, then you're 2%, then another month goes by, you're still making money, everything's going just like you thought. But this month, it's not that you're less profitable, you're less disciplined. You get a little, slightly, almost unmeasurably more relaxed in your entry, and just slightly, maybe even unmeasurable, little more relaxed with your stops. And you never see it because it's almost unmeasurable over such large periods of time. But all of a sudden, a year goes by and you're a lot less disciplined than you used to be, and that leads to a period of failure. All of a sudden, you're making lots of mistakes, and now you're seeing it as negative results. And you never, you didn't see it coming, if you will. And it's a real problem, because then you don't know what you're doing right anymore, because you've lost the confidence. But you don't really know what you're doing wrong anymore, because you feel like you're doing what you've always been doing, but you're just doing it 20% less effectively, which could be 50 or 60% of your profits gone, right? Because it's not one for one. And you go through this period and you're like, what is going on? And you lose confidence on top of that. And now you're really screwed. Being in a community together doesn't allow us sort of that comfort. You have to be on your game all the time, especially if you're the leader of a group, right? Where we talk for an hour and a half to 3 hours a day. You always have to be sharp, right? So I thank you for that. The level of work. I spend hours and hours and hours and hours and hours and hours and hours. But I do all of that thinking of you, thinking of us. And I don't know, if that keeps me sharp and interested, which I am sharp and I am interested, then I thank you for being in my life. And I think it's hopefully, I hope it's a symbiotic relationship. So anyway, so now we can discuss 12 years of recent economic history, and if you weren't involved, that might be enlightening, but then I can fold it in 1,000 years of economic history, which I studied at Harvard, and then tie that into why this week is interesting. And then you have this aha moment, and all of a sudden you've gone on a journey with me back through the financial crisis, in which I was involved minute by minute. But also I take you on a journey through Harvard and 1,000 years of economic history, which you may or may not have known, and then put it into today. And you're like, man, I looked at that at the calendar and I thought it was just a rate decision. Now I understand it's so much more, and that there may be long-lasting consequences. Yeah, cool, right on. Then it was an interesting conversation, right? So anyways, namaste. So peace on earth. Let's do it this way. Peace on earth. Whoa. Peace on earth. May the pips be with you. May our profits be above average. Thank you for being on my team. Please visit tradersway.com. Open up an account. Download MT4. Install my chart templates for free. The link is below. And subscribe to Forex.Today. You could also go to Twitter.com/FXBootcamp to get tweets there when I start the webinars. Maybe that works better for you. That's cool. And training and education, both videos and live coaching, is available at FXBootcamp.com. My swing trading group is at swing.fxbootcamp.com. That's where I help you set up trade plans worth 100 pips to 300 pips each, which we are on several right now. What else? I think that's it. I will see you tomorrow. Please leave a comment and a like, and I will see you tomorrow. Thank you for being on my team. And if you're new, I'd like to remind you that there's 4,000 videos associated with my work on YouTube. They're all free. Watch them all if you want. Cheers.